Okay, so this video lecture is the continuation for our commonly used audit procedure. So in this uh, case, we will be discussing about the external confirmation. Okay, so according to PSA 505, this is entitled External Confirmation. So this refers to the audit evidence that is obtained by the auditor as a direct written response, okay, from a third party. So this is done I mean, by the confirming party or the third party, or in our example earlier, we used the supplier or the customers. Okay, either in paper or in electronic form. So external confirmation, usually this provides a strong audit evidence regarding the existence and rights and obligations assertions made by the auditor. So normally, existence meaning the auditor will determine if a particular transaction related to the account did exist, okay, from the customer or suppliers. And in the case of the customers, if indeed the entity has the right to collect from them because the customers has an account balance, okay, for their purchases, and the entity's obligations to the suppliers, okay, if indeed the amount and the balances are accurate or correct. So confirmations, these seldom provide evidence about valuation of asset, okay, because in the case of receivables, it is impractical to ask the customers to confirm information about their ability to pay, okay, for their accounts. So meaning, in this case, the auditor will not determine if the customers are liquid enough, okay, to pay or um, to settle, okay, their account balance to the entity, because it might be offending on the part of the customers to be asked about their ability to pay. Okay, so that's why confirmation is only up to the determination if indeed the entity has the right to collect from them. External confirmation also are frequently used in testing account balances and their components, but this may also be used for other purposes as well. Okay, so as mentioned also, aside from the account balances, the auditor will know if indeed a transaction occurred between those third parties and with the entity. So the external confirmation, um, here the accounts of items commonly tested using this procedure is bank balances and information about loans from banks. Okay, so the auditor can inquire of this information from the bank. Okay, another is account receivable balances and terms from the customers. Um, Another is inventories held by third parties at a warehouse which are located outside of the company premises, or even the inventories out on consignment. Meaning, in this case, the auditor will determine the extent of ownership of the entity over the inventories. Okay, if they are the the consignee, for example, meaning um, this is their uh, assets still because it is under the consignment terms only. Okay. Whereas the auditor could also determine if that specific inventory within their warehouse is the entity's ownership or not through um, validating if that is um, a consigned item from a consignor, or it is really the property or the inventory of the entity. Okay, whereas or another thing is, the auditor will also determine if there are any inventories out for consignment, meaning in this case, the entity still owns those inventory although they are not within the premises, okay, of uh, the company. So another is the property title deeds by lawyers or financiers for safe custody, or custody, I mean, or as security. So the auditor can confirm of this as well from the third party uh, involved, okay, in this transactions. Okay, another is loans from lenders. So this is the same as inquiring from the bank as well. Okay, accounts payable balances and terms from the suppliers. Another is terms of agreement with third parties. Okay, to confirm if that really existed. So, how to handle external confirmation? Uh, the auditor, when performing the confirmation procedures, so he should maintain control over the process of selecting those to whom a request will be sent. So, in this case, the auditor will determine who will be asked for a particular um, information that he needs to know. Okay, so the preparation also and sending of confirmation request, this will also be done by the auditor, and as well as the responses to those requests will be sent directly to the auditor. Okay, so control is maintained over the communications also between the intended recipients and the auditor. So that is why in this case the auditor will be the one to process it, to send it, and the confirmation replies will also be directly sent to the auditor. Okay, to minimize the possibility that the results of this confirmation will be biased. Okay, because of the interception or any alteration by the entity, okay, or other for this confirmation request or responses. So the auditor should also make sure that he is the one who sends, okay, this confirmation as mentioned, and it should be properly addressed, okay, and all replies as mentioned also earlier should be sent directly to the auditor. So here the auditor will consider whether replies have come from those intended persons, okay, whom he sent those confirmation requests. When the responses received are in electronic form, for example, it was sent through fax or email, the auditor should also verify its validity, okay, and its sources, as well as the contents of those replies. So he will do the call, okay, to those senders if indeed they are the ones who provided those responses. So in addition, the auditor may consider requesting the sender also to mail the original confirmation directly to him. Okay, so normally there are two types of external confirmation. So here, the auditor may use either positive or negative external confirmation requests, or he can also use, okay, both. Okay, when we say positive confirmation request, this is a request that the confirming party respond directly to the auditor. Either they will indicate whether the confirming party agree or disagrees with the request containing in the confirmation letter, or they will prove that the requesting information, okay, and in this case the auditor will use a blank form in which the recipient will actually write his responses. Okay, so in the first type of positive confirmation, this is just like a checklist, for example, where there is a statement and the recipient will just check if they agree or not, or they will state if that is correct or true, wrong, or incorrect. Okay, whereas in the second type, here the recipient will actually write the responses. Okay, because in this case, the request is in the blank form. Okay, so a response to a positive confirmation request, this will normally provide a more reliable audit evidence because when no response is received, the auditor ordinarily will contact the recipient, okay, to elicit their responses. So this is how positive confirmation is done. Okay, so where the auditor is unable to obtain response, so he should apply alternative procedure to compensate for such unavailability, okay, of audit evidence from confirmation. Okay, so those are for the positive confirmation request. What about for a negative confirmation? So in this type of confirmation, it is a request that the confirming party will respond also directly to the auditor only if the confirming party disagree with the information that is provided in the request. So again, the recipient here will just send his uh, response if he disagrees with the information provided in the request. That's why it's called a negative confirmation. So therefore, if the respondent agree with the information stated in the confirmation request, so no response is needed. Okay. When no response is received to a negative confirmation request, in this case, the auditor will assume that a respondent did agree, okay, with the information stated in the request, and there will be no explicit evidence that intended parties have received the confirmation request and verify that information contained therein is correct. So this is the problem with the negative confirmation because the premise is if there is no response, meaning the auditor would assume that the recipient agrees to the information in the request. However, the question there is the intended recipient did receive the request? Okay, so that is the next question. If they did not receive the request, then probably that is the reason why they did not send any response at all. Okay, so that is the question and the problem with the negative confirmation because in this case, the auditor is not obliged to call the recipient to elicit their response. Okay, because the premise again is if there is no response, meaning they agree. So, but the question is, did they really receive such request or not? Okay. So, consequently, negative confirmation may only be used when, okay, the auditor has assessed the risk of material misstatement as low. Okay. And he has obtained sufficient appropriate audit evidence regarding the operating effectiveness of the internal controls which are relevant to the respective assertion. However, if the assessed level of misstatement is high, then negative confirmation will not be used. Okay. Another is the population of items subject to negative confirmation procedures comprise a large number of small homogeneous account balances, transactions, or condition. So meaning this is just a small number, okay, and the account balances is also considered less material or the transactions and conditions as well. okay, are considered to be less relevant. Okay, so next is when there is a very low exception or deviation rate that is expected by the auditor. That is again due to the effect of operating effectiveness of the internal controls. And lastly, the auditor is not aware of the circumstances or conditions that would cause recipients of this negative confirmation request to disregard such request. But again, the main determination point is if the assessed risk of material misstatement is low. Okay, so normally negative confirmation request will be utilized. Okay, so those are for the different types or two types of external confirmation as part of the commonly used audit procedures.